JB here. Hope everyone's doing outstanding. September 8th, 3:40 on this fine afternoon. Talk really quick about the market. Some names I'm looking at go from there. Apologies again. I am under the weather here today, so my voice a little hoarse, a little cough. I'd be okay, but just apologize about that. Talk really quick about market. Some names I'm looking at go from there. I just posted that little headline in Market Watch. 10-year yields, big 2025 drop could be a recession indicator, right? So, funny you put that in context. This is where yields are compared to where they were at the end of, uh, uh, November, September, excuse me, September of 2024. So, ironically enough, or I guess coincidental, that September low was the jumbo rate cut, right? So, hopefully, there's no deja vu here. We don't get down below 4%, and then the Fed cuts rates, and then the yields start to rise. Probably would not be a good situation, but anyway, it's like I was saying this morning. You had Japan prime minister stepping down. That was supposed to be the next big thing that was going to derail the global economy. Now it's UK yields, unsustainable debt. It goes on and on. At some point, the market will start pricing in some risk, right? I mean, not some risk, but it is pricing in risk, right? That's what the essence of the market is. But uh, we'll pull back substantially. And to me, a lot of times it happens when there's no news, there's no headlines, the yields aren't spiking, there's no uh, U.S. dollar getting destroyed or some other catalyst, World War III or Iran or Ukraine or all these other things that have gone on. It'll be just because, right? And that's the ones to worry about. But for now, today, look, I mean, today's action, tight chop, 647.23 was the low, 649. Did we get up to 649? Why don't I have the 640, 649.84, so right near the 650 handle. So very tight trading range, but unfortunately that there's some names I'm looking at just not doing much here today. So and also I was looking for this a resumption of the small cap rally. Flat as a pancake here. S&P was slightly flat for a second, bounced a little bit here. So not much, especially to start a week. We do have earnings. I didn't know Restoration RH reports, I believe September 11th, right? So 9, 10, so that's Thursday. They announced their earnings Sunday, and it's just the CEO he does things that are just weird. I don't know weird, but what company, a multi-billion-dollar company, announces their earnings date on a Sunday, the week of, right? The good thing, well, I would say the good thing, if you had RH calls, you would hope there'd be some premium bump on the calls. They're actually red today. I mean, the stock's down 4%, is a little more than 4% here today. I don't know if I'll trade. The premiums are nuts. Stock was 450 to start the year, but certainly interesting as we get close to the Thursday. Anyways, that's kind of like overall markets. Today's one of those days. Last week I was cautious, and it was a holiday shortened week, so I was, I'm like, let me nibble some spec hedge puts ahead of the jobs report. And then, in hindsight, I'm like, I probably should have sat on my hands. So that's kind of what I'm doing here today. So the one trade, I mentioned it on Friday morning, and then this morning, Nike. And, it's like the anti Lulu and Under Armour trade because Nike has weathered all those storms, and every time it comes back stronger. I mean, the stock has been hurt over the last year, some concerns, and then obviously the tariff situation, earnings. Then they finally had new leadership, and you saw a nice boost in the stock at the end of June, and it's been hovering around. You look at the 50-day moving average right there, it's 74.95. Came down and tested Friday's lows and bounced. So I like this one. I got some spec calls into next week, inexpensive. And then if it starts to move, I'll look to get some more. So at least I have some exposure, not a crazy position, right? And then if it does have continuation break 74.95, maybe next tomorrow, I'll look for post earnings calls. Maybe so they report earnings September 30th. So that might be a trade to add for earnings, especially if it's over its 50-day moving average. That's Nike. IIPR pool doing nothing here today, all the way up to 57.31 on IIPR. 57.50 is the breakout, and then it's just been chopping around. So I'm not doing anything there. Same with pool. I mean, pool's been sitting there at 330. I would have loved to see some follow through with yields, being the story there. That hasn't done much. SERV Robotics all the way up to 1071 in the morning. I almost went to get more October strikes, and then boom, off the highs, down to the lows, 1020, then back up, still at 4%. I'll be patient there. There's RH. Disappointing, right? I could have went the other way on Hood on Friday, and if you take a look at the calls, I try not to look at them, but I was able to play TTD on the S&P 500 ad. So Uh, actually only up 500%. So when I say only, here's a stock that, it's 15% move today, and the weekly strikes you got last week. I mean, you should think there would be substantially higher gains, but still a nice one anyway. I'm trying to think of some of the other names. I mean, a lot of big movers. AppLovin added to the S&P 500. Funny, that was the big short piece. Everybody was talking how App, you know, forced kids to use their monetize them by having push content. Some of the content questionable, and here it is. I mean, the stock is at, I think it hit all-time highs here. I'm just trying to look at, Lemonade's another name I always look at, and that one's kind of been consolidating. It's just, I don't want to be overly aggressive. I was watching after the noon hour. I'm like, maybe this one's ready to squeeze. Um, Joby as well. And, I had Joby on the watch list this morning. It's like one of these days I'm going to get back in, but it looked like it was going to break out in the morning. And then by 1 o'clock, it's back near lows and back in the red. So I'm not doing anything there. What else did I have on here? I think, okay. And then CGC, obviously, just doing nothing. It's going to need some kind of catalyst at some point. Um, what else do I have on here? Why don't I have, oh, I keep looking at Fubo too, right? So I've talked about Fubo on and off for years. I mean, it's such a great story, especially with football season kicking off. And not only that, then you go into this big season of NHL, you have NBA, and now this backdrop of gambling, which is, I mean, it's pretty remarkable to look like 5 years ago, and then fast forward to now and see like how ads are so much like they are in the EU, right? I mean, if you've been into Europe, I remember, I don't know how long ago, that was like 10 years ago, they have like betting locations on streets everywhere, right? It's such a different than the US was at the time. And now that the US is getting more normalized in regards to the gambling, it's just remarkable. Anyway, that's rants for other days. V, right? I mean, take a look at V today. Maybe you thought, yes, a Friday it was was going to reverse some of the losses, and it's back in the red here. Some of that again, I think. So if you take a look at what usually is sensitive to rates, and again, TLT is almost at 90 today, which is just remarkable. Is financials, right? Financials, they don't make as much money when the spreads are tighter. When yields go down, banks don't make as much. So I think that's some of the reason. You take a look at FAS today, and these aren't ones that I've traded, but do I have? Oh, JP Morgan's off the lows. So yeah, that's about it, folks. Sorry about my voice. I'm just gonna be selective, and then if I see some opportunities tomorrow, I'm certainly, get more aggressive at some point. But makes no sense just to trade, right? That's a recipe for disaster. Anyways, have a great day, folks. I'll be back. Rock and roll.